This trade was frustrating because I lost on the same setup the other day. This time I saw it again, only with more confirmations, and still got stopped out. My name is Vi. I document every trade and every backtest I run as I work towards consistent profitability using market structure, supply demand, and price action analysis. In this video, I'll walk through a trade from my journal where stacked confluences convinced me to take a trade, even though higher time frame narratives were telling me the opposite. First, we'll look at the higher time frame narrative, then the lower time frame entry model, and finally the lesson this trade taught me. Let's jump into the charts. So as always, we'll start on the 15-minute chart. We are bearish internal order flow. We have a swing high and a broken structure by taking out this low and pulling back from there. So our swing high and our swing low. Now, if we zoom out on the 15-minute, we actually see that we are bullish on the 15-minute. We see that here with the swing high and then the swing low right down here. On top of that, we have our Fibonacci tool running from high to low, and we can see that we're actually in the golden zone between 0.618 and 0.786 of this external leg, which tells us that we might be due for a reversal. So that is the higher time frame context that is moving opposite from the internal order flow we're observing. But on top of that, what we see here on the 15-minute, we have a nice little order block forming. We see a bunch of stacked orders from Asia session before the aggressive move down. Price ranges once again and then moves down, creating that break of structure to the downside initially. If we go to the 30-minute, you can see it a lot clearer in the sense of the order block. And then you also have this fair value gap here. This was the stacked confluence that gave me the impression that maybe there's still more room to go before we reverse and align with the 15-minute. We had liquidity to take in previous day lows down here as well. In my mind, I'm thinking that we can tap into this order block, see a 1-minute market structure shift, and then take out these lows before potentially realigning with the 15-minute. That was my thesis going into the day. So with that context in mind, we'll play price down and see what happens. So right before 9:30 open, we get a mitigation of our key point of interest. This is always our trigger to then go to the 1-minute to see what kind of price action we can observe. We can see that we've touched in right here. And for me, we have 2 points of interest that we want to see sellers overrun. 1 and 2. We're going to move us back a little bit in time just to see this a lot clearer. So at this point, we've mitigated our key point of interest. And here's the first barrier that sellers need to overcome in order to convince me that they are in control. The reason is because we have a nice 3 candle pullback, and we have another one that represents a very, very bearish move followed by a bullish activity, suggesting that there could be buyers here that also need to be taken out by sellers in order to move down further. Now, the other thing that was throwing me off in this trade is that we're very close to the 9:30 open. So let's play price out to see what happened as we approach the 9:30 open. Here we can see at 9:23, we actually get the break beyond our first key level. I was really debating on entering short at this point with my stop above this high. However, I've been washed out by volatility at the 9:30 open numerous times, and I chose to not take this trade because I didn't want to get washed out at 9:30. Now, if we play price out, let's see what happens. So as we can see, around 9:30, there wasn't that much volatility. It did chop around a little bit, but not to the point where it would have stopped me out. That's hindsight 2020, because a few minutes later, around 10 o'clock, we do get our break below our second key level, which further stacks the confluence that, okay, sellers might be here to bring price further down. If you play out price further, we'll notice that price does continue down in the expected direction that we had hypothesized earlier. At this point, I have my trade on. I've set my stops here to target this last buy and sell candle with stops over the recent highs. And my take profit was represented here with these equal lows, which made total sense for price to want to take, potentially before taking this previous day low as well. With that said, let's see what price does, as my expectation at this point is for price to come back into this new order block that's been created. It's not as strong because it hasn't taken any lows, but it is an order. It's a collection of orders, which tells me there's a reason for price to return to this area and then continue down. Let's play price down and see what happens. So as we can see, price aggressively moves up and moves right through this collection of orders, ultimately stopping me out. So now that we've gotten stopped down, it's interesting to see what continues to happen. I didn't enter into any more trades on USD CAD, but if we play price out, we ultimately see that price eventually does change character. On the 15-minute internal, we break this previous high and are now bullish. The exact expectation we initially had when price entered this golden zone of the 15-minute order flow. Looking back, I think I still had enough confluences to justify the short. It just wasn't a trade that I was going to win today, and the probabilities weren't on my side. In hindsight, it may have been wiser to wait and see what price does relative to order flow, instead of immediately acting inside this key area of the 15-minute external range. The one positive here is that I only risked 1% on this trade. So even after this loss, the account is completely intact. And that's really the bigger lesson. Not every setup works, but protecting your capital ensures you can come back tomorrow and keep trading, because long-term consistency comes from risk management and patience, not from any single trade. I'm not a guru. I'm just someone documenting the journey towards consistent profitability using market structure, supply demand, price action analysis. If this breakdown helped you see the charts differently, then subscribe and let's keep sharpening our edge together. And if you want to see another trading breakdown just like this, check out this video right here, and I'll see you later.